Welcome everybody, thanks for joining. In this video, we're gonna be talking about a company called Alibaba. This is a company that, if you're not in the investing scene, you may think of this company as a cheap Chinese e-commerce website that you can order cheap goods from. That's usually what it's from. Discounted goods from China. It's much more than that. It is a very large, important, and growing company in China that resembles Amazon in a lot of ways. It's kind of considered the Amazon in China, even though there's some distinct differences. So we're going to be talking about what Alibaba does, how it resembles Amazon, how it's different than Amazon, the valuation of it, and then the risks of if this company is worth it to invest in. Is it worth the risk? Is it worth the risk of dealing with the Chinese government and the weird things that they've been doing with companies that are traded on US stock exchanges? So we're going to be going over all of that in this episode. Now, the first thing I want to look at here is the stock chart of Alibaba. This is what makes this an intriguing investment. If you look at the actual price of it, it's trading at 205. Now, the current market cap is, let's see, it's $557 billion. So this is a pretty big company, but it's nowhere close to Amazon, right? It's a lot smaller than Amazon, and I think deservedly so. But regardless, it's right up there next to the market cap of Tesla, to put that in comparison. Now, if we look at the performance of the stock recently, we can look at the 1 day, it's down today. We can look at the past month, it's down over the past month, down almost 4%. The past 6 months, it's down 12%. Not a good performance from Alibaba. If we look at the past year to date, it's down 9.82%. Okay, if we look at the trailing 1 year, it's down 18.35%. Now we can compare this to Amazon's probably the most similar. So we'll throw up Amazon. Amazon is now in yellow and Alibaba is in blue. And you can look at the comparison here. Amazon is in the green for the past year, about 20%. And then Alibaba, of course, is down 18% over the trailing year. Then we look at the past 5 years, and the differences are even greater. Amazon has pulled ahead by a huge, massive margin, right? So investors so far have done much better to keep their money in Amazon than in Alibaba. But as investors, you can't be backwards looking. You have to be forwards looking. What is this stock chart going to look like over the next 5 years? That's what we're going to try to look at. If we look at just Alibaba's stock price here, this is really what's made this investment intriguing, is the investment has basically flattened out over the past 5 years, not moving too much. In fact, if we go back to 2018, right, it's up like nothing from 2018. This really hasn't moved a whole lot. I mean, check that out. This has been a flat company in as far as the stock is concerned for 4 years. Now, this would make sense if the company hasn't done anything and really has just been kind of stagnant for the past 5 years. There's some companies that are very mature. They're not really growing their revenues, and it makes sense for their stock price to mostly just hang around the same point. If you have utility companies that are slow moving, if you have companies like Coca-Cola that have a large saturated market, they're not really growing that quickly, then their stock price makes sense to hang around the same area and they can dish out dividends. That makes sense. But for this company, it really doesn't make sense because if we look at some information here, Alibaba has not been the same company it was back in 2018. If we look at this chart here, this is from Hypercharts, by the way. It's a cool website. There's an affiliate link in the description. You can get a discount if you sign up with it. But I really do like this website. It's one of the rare companies that'll endorse their product. But Hypercharts has some visuals that I think are pretty awesome. This is for Alibaba. It shows it on the trailing 12-month revenue multiple, trailing at a 5.2. And then we can look at some information here. Annual active customers. So how many customers they have active every year. This is quarter by quarter, not year over year. So this is every 3 months, they're increasing the amount of customers they have active pretty dramatically. They have 466 million active customers, 488 million, 515 million, so on and so forth, all the way up to 811 million active customers over the past year in Q4 of their financial year 2021, which is last quarter. Then if you look at the mobile monthly active users, that's even higher because a lot of people in China and around this area shop online on their phone, of course. Now, The company, again, this chart is not flat. Even though the share price has been flat since 2018, this has gone up, almost double, maybe an 80% increase over that amount of time. That's pretty significant. If we look at their revenue segments, their core commerce has grown significantly. That's the blue lines here. You can also look at cloud computing. That's a part that's growing as well. If we just filter by that, it really shows how much their cloud computing is growing. This is crazy growth. It's gone up like 6 times as much over the past since 2018. So the company hasn't remained flat. If we look at their digital media and entertainment business, this hasn't grown quite as much, but again, it's growing as well. And then other things are growing overall as well, but not quite as nice as the cloud computing and core commerce. So the story of this business is that it's growing rapidly and it's in very important segments. Commerce, online shopping, cloud computing, digital media and entertainment are, of course, growing industries in a growing economy, which is China. If we want to give numbers to these visuals, we can look right here. This is the financial income statement of Alibaba on an annualized basis. So we're no longer looking at quarter over quarter. We're looking on an annualized basis. Here's the annualized graph. That paints a nice, pretty picture there. You can see how rapidly they're growing their revenues. And then we look at this, it's in 2013, they grew 74%. And then the year after, I won't say it every time, but 52%, 45%, 27%, 46%, and then back up to 73% in 2018. And then in 2019, 40%. 2020, they grew 28%. And then so far, 52%. And over the trailing 12 months, they've grown 52%. Those are numbers that a normal startup company would be usually happy to achieve. Growth rates of 50%. But of course, this is one of the most massive companies in the world. And it's one of the biggest, most important companies in China. So again, circling back to the stock price here, we don't want to just focus on just the stock price because that just shows us where this is traded. But you see a discrepancy. You see the company growing massively over the past 4 or 5 years and the stock trading up sometimes and then trading right back down. And a lot of this can accurately, and I know I don't like this term because sometimes people use it as an excuse for everything, but this is one of the cases where I think FUD, F-U-D, is the accurate term to explain a lot of this, which of course means fear, uncertainty, and doubt. People are fearful, they're uncertain, and there's a lot of doubt investing in Chinese companies. And so that's something that I'll get to later in this video, but I think that's suppressing the stock price. Now, let's go ahead and move on to one other thing that I want to look at to explain what Alibaba is, what this company does, and the similarities to Amazon. Here's a video from the Wall Street Journal. They put this together to compare strategies of Amazon and Alibaba. And so you can see how they kind of mash up together. Let us take a quick look at the two companies and the similarities and differences between how they run their business, their expansion plans, how they're doing fulfillment, the prices they're charging. It gives us some good look at the qualitative differences and similarities between the two. But there's more to the story than that. When I'm looking at companies I want to invest in my portfolio, this is the Story Fund. It is an aggressive growth-centered portfolio where I invest in companies that are growing their size, their revenue quite rapidly. I'm not focused so much on their profitability because these companies are in the early stages of their development. I'm invested in Amazon. This is one of my holdings. I'm considering buying Alibaba. So that's the reason that I'm looking at this company. But we can't just look at the qualitative look at the companies. We can't just look at the qualities. We have to compare the numbers together. If we look at Amazon, for instance, this is very similar to Alibaba, except one of the differences that they didn't mention is that Amazon is much bigger. They're a much more big, successful company than Alibaba. So it makes sense that their market cap is much higher as well. In fact, a lot of people don't realize, I think, the full difference in scale between Amazon and Alibaba. If we look at Amazon's numbers here, the total revenue for Amazon last year was $386 billion. That's roughly 4 times the amount of Alibaba. That's incredible. And their revenue growth, by the way, it's not as fast as Alibaba's. We can look at Alibaba's here. The revenue growth of Alibaba is very fast, but Amazon's is not too shabby. They're growing their revenue pretty quick. If we look at their revenue growth over the past couple years, it's not like 50 and 60%, but it's 30%, 20% in 2019. And then in 2020, it's 37%. That's pretty fast. And then the trailing 12 months revenue growth for Amazon is 41%. That is very fast for the size of this company. They're already much larger than Alibaba. To give another visual to how much bigger Amazon is than Alibaba in terms of revenue, we can do a direct comparison here. Amazon's revenue is in blue, Alibaba's in red, and this is quarter over quarter since the beginning of 2017. So in 2017 Q1, Amazon revenued $35 billion and Alibaba revenued $5 billion. And last quarter, 2021 last quarter, Amazon revenued $108 billion, Alibaba revenued $28 billion. So even though Alibaba is indeed growing faster than Amazon, it needs to be said that Amazon already has a massive lead in terms of total revenues. That is something you have to factor in. If Alibaba makes it to the size of Amazon, which I think they will eventually, what will their growth rate be at that time? It might be similar to Amazon's, or it may be slower or faster. We don't really know, but Amazon is already there, and we know that Amazon is still successful despite already being this big, which is pretty incredible. So that's one comparison that I want to highlight between the two. Amazon is bigger, they're growing a little bit slower, but they're still growing very fast for the size of their company. Alibaba is quite a bit smaller, but growing roughly maybe 70 or 80% faster than Amazon. So not quite double the speed, but quite a bit faster. If we look at some other things we can mention, Amazon has its troubles with the government, right? Congress wants to, they want to show that they're not being bullied by big companies and they want to stand up to big companies. This is politicians. Come on. They have to go back to their constituents and say, look, I stuck it to Jeff Bezos, right? Everybody hates the billionaires and I went and stuck it to him. That's what our politicians like to do. But a lot of our politicians, they balk, they talk a lot, they don't do much at the end of the day. They don't do anything that really would devastate Amazon. And I haven't seen anything so far that would be too devastating to Amazon. There's one bill that if it really got passed and went through the whole process of the government through Senate and got signed and everything, that they would have to separate their businesses, that could cause trouble for Amazon. But I think that has difficulty. So Amazon does have some government issues, but they have to go through the American Congress and the executive branch and through the judicial branch and everything within the US government. Over in China, it runs a little bit differently. When the Chinese government wants to enact something, it's like one guy just making a decision and they just enact it. They do it right away. And that's what we've seen with China running Alibaba is these companies are becoming very big and powerful in China. They have a lot of political influence. And because of that, it seems like the authoritarian government in China does not like that. And they're more than willing to, how do I put this nicely? They're more than willing to damage their own companies in their own country, even their flagship leading companies, in order to show that they're in power. The Chinese government is more than willing to do that. And they've done that time and time again. There's headlines after headlines after headlines of the Chinese government sticking it to their best companies. And I've noticed a trend, other people have pointed this out as well, that China seems to be more critical of companies that are traded on US stock exchanges like Alibaba and JD and these other companies, right? We have ones like this. Didi, they took the app off like a month after IPO. The stock price tanked. Revenue was down. This is a big hit for this company. There's so many articles like this with the government in China sticking it to these type of companies. So this is a risk, and a lot of people are concerned about it. What will China do with the investment in Alibaba, right? If you have your money invested in this company, you're putting some of your money at exposure to potential damage done by the Chinese government. And it's up to you to decide the extent of what the Chinese government is able to do with their companies in preventing them from growing or that type of thing. But I think there's good arguments for both sides. Now, finally, let's go ahead and look at valuation. In my opinion, I don't think that Alibaba is at such a huge discount that a lot of investors try to make it out. They try to make Alibaba look like it's the biggest deal, right? It's a steal right now compared to Amazon. I don't really consider it a steal right now compared to Amazon. If we look at Morningstar, they consider Alibaba a 4-star stock, which means that there is value there. They think that it is undervalued by 34%. They say the fair value is $313 and it's currently trading somewhere around $205. So there's obviously value in Alibaba. And I think the longer the company grows and the lower the price goes, the bigger this discrepancy, the more value there is. So at some point, typically stocks trade to their fundamentals. They don't veer off from their fundamentals indefinitely and never return. If Alibaba continues to grow at these insane rates that they are, it's just a matter of time until this valuation comes back. It's just never going to stay away from this valuation forever. I just don't see that happening. If we look at Amazon's valuation for comparison, they're a 3-star stock. They're still undervalued, right? The fair value for Amazon is $4,200 and they're currently at $3,700. So Morningstar's estimates aren't perfect. This isn't like it's written in stone, but I think this gives you an idea that Amazon's probably undervalued, but there's less FUD priced into Amazon stock. There's less fear, uncertainty, and doubt priced into Amazon because it's here right in the US. People are familiar with it. Investors don't have to concern themselves with the Chinese government. So the way to look at these two investments are, I think they're both good opportunities. Obviously, I think Amazon is one of the best opportunities in the market right now. That's why I have it as part of this portfolio. It's one of my largest holdings right now. So Amazon, I think, is a fantastic opportunity that doesn't have as many unknowns as Alibaba. But when I look at Alibaba, I also have to say I think this is a good opportunity, even factoring in the Chinese government. When I look at growth rates like this type of chart here, when I view this type of growth rate, when I view these real revenues and the things that Alibaba is doing, it's only a matter of time until I think the stock price catches up or it moves along with this type of revenue growth. This can't happen forever and the stock continues to just stay flat. It would just be ridiculous after a few years of this happening. So eventually, I think the stock will move up to reflect the growth of this company, the value that it's bringing to the shareholders in terms of revenue growth, future profitability, all those type of things. As Alibaba grows and they have their fulfillment all throughout the world and they expand into different countries, they use the advantage of their own not fulfillment centers, but their own manufacturing within China. I think there's a lot of upside for this company. So that's my view on this. I think that Alibaba is a good deal. Do I think it is way better than Amazon? I don't really think so. I think both of them are good deals. I think that Alibaba will likely trade at a discount to Amazon for the foreseeable future, but I cannot see this company trading down too much in the future based off of its revenue growth. I just don't think it will happen forever. So as of right now, I have not decided to include Alibaba in my portfolio. That's not really because I think it's a bad deal or I don't think it's worthy of being in this portfolio. The reason why is I have a lot of companies in this portfolio. And so I have Alibaba on the watch list. If any of these don't work out, and I think, I see Alibaba as a better opportunity than this company, then I'll swap them out. I'll sell out of one of these companies, introduce Alibaba, and hope that if I hold it long enough, the fundamentals will continue to go up. And eventually, the fear, uncertainty, and doubt that follows Alibaba will dissipate over time. And that difference between the fundamentals of the company and the valuation will converge together. So that will be what I do in the future. But I don't plan on adding it as an additional holding because if you can see, I already have a lot of companies. Now, that's my thoughts overall. That's a quick update on the Story Fund. I hope you enjoyed the video. I hope this was helpful. If you did like this video, be sure to subscribe to the channel. Also, just a note for people that are not aware of this, which I think most of you are, but I have another entire channel where I go over a different portfolio, which is my passive income account. This is one where I talk about not growth companies, but dividend paying, more mature companies that pay out a lot of cash flow and dividends. And this portfolio has been very successful. So I have a link to that channel in the description of this video if you're interested in subscribing to that one and viewing that one as well. But I figure because there's probably some people that they're not aware that I have two channels. But anyways, thought I would mention that. Hope you enjoyed the video. I'll see you next time.